Hey, I got something to say. I'm just so sick of hearing everyone complain. I know it's tough and I know there's pain, but hitting bottom is the only way to change. So I'll keep hustling, you keep struggling, bitch, I'm humbling.
Welcome to another evening interview on CryptoEMC, guys. Today was a roller coaster ride with Bitcoin. Our entry at 34K stuck, so we're really happy. Is the worst over? That's a big question. And I think you heard enough from us. The reality is there's some proper serious good TA guys out there. And we have somebody here today to come and share their thoughts and their opinions on how we're going to go about tackling the next Bitcoin run. So, guys, I don't think we need to keep anybody waiting. Lee, let's bring him on. Cheds, buddy, how are you doing?
I'm doing really well. I want to say thank you. I appreciate the opportunity to speak to your audience, introduce myself, and really just hear from you folks. And I'm happy to be here, man. Let's have some fun.
I don't think anyone here out there needs to to know who you are. I mean, and everyone knows who you are. You are a legend here in this crypto space. I'm sure all our followers knows you. I mean,
do you know what it is? It's like a survival game. If you're just around long enough, you become a legend because you've just survived in it, because it's such a difficult thing we try to do. So it's not that special. It's really just surviving, I think. So thank you.
You've been surviving with dignity, buddy. So I'm going to give that to you. I really love the fact that you don't go about BS. You're honest. We all lose. The reality is, like we say to everybody, there is no crystal ball. Even if you know anything and the whole rule book, stuff still fails. That's the thing. And what I like is you straight up about it. And that's the mark of a good trader. And one last thing before we get into stuff, the mark of a good trader is somebody that is humble. You know why? Because trading teaches you about yourself, and you know that big bravado does not make for a good trader, because you end up BSing your own bank account balance and end up paying in for that. And Cheds, I mean, Trading Wisdom, that book is amazing. Maybe weigh into that a little bit and add on what I'm saying, because I think if there ever was somebody that literally wrote the book on it, I think it's you.
Well, thank you. Those are some really nice things to say. I really don't see myself as humble, honestly. I think my ego is incredibly out of control, and there are moments where you'll see that. And I'm trying to work on that. So, I mean, there's juxtapositions. I can be humble, but I'm definitely, just full transparency there. I mean, trading will just, it will humble you. Like you said, I'm right now, I'm in a kind of a tough position that I didn't follow my rules on. Right. And it's an interesting situation. I put out a tweet. So all these tweets, like the book, these are all like dumb mistakes I've made over the years. And it really started back in, I started doing it back in like 14, 15, where I realized if I was really gonna grow as a trader, I had to teach those mistakes to other people as my kind of penitence, a way to hopefully stop repeating them. I started a blog, and I really had my Twitter account and kind of grew doing that kind of stuff. And then, eventually I wrote the book. I wrote the book when I did CMT level 1, because Chartered Market Technician level 1, like for years, I always heard people debating things, and I wanted to know like what really was the right way. Like, what are the real rules of thumb? I think about like poker in terms of probabilities. When you've got a pair over pair, you're like a 70% favorite, and I try to find spots like that in trading. But until I kind of knew what like the laws were, and classical charting, Japanese candlestick, other methods, I didn't really know what the truths were. And so after I did CMT, that led me to actually write the book, Trading Wisdom. So anyway, I put out a tweet recently, back to that position I'm in. I put out a tweet where I said, the biggest losses often come after the biggest wins. Mm-hmm. Right. So I scored like an amazing win in this play, and it was unexpected. And it was just, and it's because I hadn't thought about it too much. I traded off instinct, and it worked out really well. And then, I had the opportunity to maybe like try it again, and maybe it was the wrong time. And then I was too overconfident in my conviction on it. Like it was almost like a false conviction. And so anyway, big losses after big wins So these tweets from me are like mistakes I've made, I'm still making, I'm trying to teach. Because you never really, like, you think you're a great the minute you say I'm a great trader is when you realize that you're not a great trader, and you'll find out, the next day or the next trade. So
we learn every single day.
You have to it's just survival, what I started out earlier. And that's like risking less every trade. That's respecting your stop loss and like accepting when the trade idea has failed. But it's like there's these I put out another tweet where I said it's okay to keep making mistakes as long as they're new ones. Right?
That's a true thing. That's a true reality that you use to measure your growth. And I think that's why I think for me, and I think definitely for you as well, you are vocal about your journey, because the audience become your credibility partner, and that then helps that internal bullshit meter go into the green, where you can basically say to yourself, at least I made a mistake, and now I have somebody that's going to check on me and make sure that I don't mess up again.
I've got Rudo for that. I mean, Rudo.
Yeah.
I made mistakes, and the reality is we know all the rules. We've been there, and then you still make those mistakes. And when you did that, you say, "Man, why did you do that?"
Well, it's a greater journey is with ourselves.
You always realize after you did the mistake, and you
realize it afterwards. It's the hindsight, right? And sorry to cut you off, but yeah, you realize it afterwards. But the greater journey is with ourselves. You can give someone a set of instructions, but can they put it together? Can we we're still so human, and we always try to over dignify ourselves as these like elite, beings that walk around the universe, but we're animals, and we're like driven by these feelings, these needs, the thrill, the greed, the inability to admit you made a mistake, cognitive dissonance. All these things are happening, and they're kind of keeping us in trouble. And we kind of try to keep ourselves out of trouble with our just risk management. And we have to find ways to, if you're a trader, or quote unquote trading for a living, like, who's your boss? So if you don't have a boss, like you said, a friend can keep you in check, but are you using a trading journal? Are you using disciplined methods, like hard circuit breaker methods, to stop you from losing further money? If you have 3 red days in a row, do you stop for a week? I mean, are you doing anything to check your own game? And if you're not, you got to start thinking about that and thinking like that.
You need to trade. You need to trade your success on a chart as well. That's basically the main thing. And you need to think of yourself as a coin going up or down. And if you're going down, maybe you don't need to be in it. And I mean, Ched, full disclosure, you see this little scrappy scratched on book. I can, there's my notes. Let's see if the camera can bring the light in. I still use this thing daily. Refer to what I handwrote here. That's my journal, guys. You know what? I started making money when I actually started journaling it. Everybody says you're going to journal, and everybody dabbles the first sentence down on a piece of paper.
Yeah.
And then you kind of think, okay, I've done that. It's like eating well once, thinking that now you're going to get into shape. And the reality is it's a consistent struggle on that basis. You have to maintain it, and that's the key.
That's the bottom line. There's things that are important to look at, like if you're doing a journal, and you don't have to go into your own exact things, but first of all, the journal should have where you entered, and then why. And the why is your trading thesis. It's your reasoning for the trade. And then with that thesis, you have to know when that thesis fails, right? That's incredibly important. So you can't form a trade idea without knowing when that trade idea fails. But it's also, those are things anyone can tell you about. But it's important to think about, write down how you're feeling at the time, right? Because you may not feel the same way later, and you might not understand. So over time, you need more data points. You say, oh, when I'm feeling this way, and then I'm doing this, you have to look for correlation in your trading patterns. How you feel when you sold, and why you felt that way. Because I know I do this. I'm sure everyone does, where like you felt great and you took a little profit, but then maybe you go work out and you come back and it's up another 20%. And you start hating yourself. So it's just like, you can only make the right decision with the information you have at that time. And then it's just trying to define your risk. It's really just defining your risk. I just did that chapter on my YouTube channel from the books. I'm doing the whole book for free. I've done 12 of the 50, and lesson 12 is define your risk. And that's it. Like, just limit yourself because you're going to mess up. I'm in a tough trade. I messed up and I started to kind of, take some losses, and I've also recovered some of it, but you're still going to make mistakes. I tweet them out too. It's like, you make great moves, but then you'll make bad moves too. You got to monitor yourself. It's a long, really difficult journey. And that's why, like, you see other people on Twitter who are just flossing all the time. You can't trust it because they are also screwing up. You're just not hearing about it, right?
Most of the traders screw up more than their wins. I mean, they have more losses than wins. Yeah. Most important is always risk management and win ratio and all those things. And your feelings and the mood is also very important. I mean, this morning, I see people saw my previous YouTube, I was not feeling very well emotionally. And then, today I was just staying outside and don't look at the chart. Even one, I really like to trade every single day, one trade a day. Mm-hmm. I've got my setup. But today, no, I know that I was not in a good mood, and then I just stay out of the chart.
You're one trade away from your next losing trade, guys, and I think that's what it all boils down to. We tend to know our weakness. I'm a very cautious trader, Cheds. So I tend to measure 20 times and then take the right one. And I think that's sometimes a bigger evil, because what if that one is the one that goes wrong? Then I'm and Lee is the gambler. But we can probably go through this and discuss this. Let's talk TA. I think everybody wants to know a little bit of TA and talk a little bit more strategy. You said one thing earlier that was quite interesting when you talked about your journal. You said about writing down the entry, how you feel, and all those perceiving things, and then looking back on that and how that played out in the market, and then having that inner peace to forgive you if price goes up higher. So when we look at Bitcoin currently, and we had an entry and it went to our lower target. We seldom get a lot of heat when we say, well, there's two possible buy opportunities for this thesis. What do you do in that instance? How do you handle that?
There's a lot of things to say about that. So your trades need to be structured towards the strongest data points, right? Towards the strongest price levels in the chart, because you're kind of looking for what's going to give me the best chance to succeed here. So, if you think about, for example, the price trading in a rectangle, right? You have a clearly defined upper boundary and a clearly defined lower boundary. And, of course, you can try to get cute and trade in the middle. And but if you're trading in the middle, it's like, where's your exact lower high? Is it here? Is it there? Right? So you want to trade clearly defined boundaries. So let's say you want to play something, and let's say you really think it's bullish ultimately, but you don't want to kind of mess up your entry, and it's in that rectangle. You have to either buy on the support retest, or you buy in a bullish momentum break. That's how are you trading the chop, or are you trading trend confirmation, or are you trading kind of the retest of the support in the trend, right? Everything is a trend within a trend. So many people mistake, like a bull flag, people mistake the weakness after the large move up as kind of like being bearish, but it's just consolidation. You have to shake out short-term sellers, rebalance things. So where are you buying? You need to buy at a clearly defined level. For example, Bitcoin had been trading at a very clearly defined level for the last couple of weeks between 46K, which was the level that would have confirmed kind of a resumption of the primary bull trend, or 40K, which essentially, or 39.5 more so, was the invalidation of the inverted head and shoulders. So bulls who are staking their thesis, their idea on a reversal or a continuation of the primary trend, they should have had their invalidation level at the right shoulder failure, 39.5. That's a key level. That's a key pivot level. Or just take 40K. It's a psychological level. Your risk on above, your risk off below. But between 40K and 46K is chop. 46K is clearly important. You can look at the chart. It's the failed double eve, double bottom. So you want to look and ask yourself, am I trading a clearly defined level, or am I trading what I think is momentum, but I'm somewhere in the middle? And if you buy there in the chop, you're just going to it's going to test your conviction, because if you buy at the bottom, you can say, I'm here as long as it holds this level. And if it goes below, you can sell it. So you want to buy as close to invalidation as possible and as close to really a key level.
So I want to ask you to actually, if you want, you can share your chart, and and then I want to take that one step further, and I think I want this to kind of resonate with the audience. What you did, though, is you gave us options, but you didn't change your goal once mid-trade. You didn't once say, I'm buying here with a different idea, and if it gets there, I will change the theory. And I think that's what a lot of people do wrong. Once they're in a trade, they will then factor in new data, and then that data might then put them into a different risk perspective. So I say every time you change your strategy, you add risk to your trade, mid-trade. So maybe you can point that out. I'm going to bring up your screen as well while you talk, because I think that is very important. You clearly set the standard for what you were looking for, and you weren't midway changing your mind.
Absolutely. So, I mean, the way I approach the chart is based on the idea of clearly defined horizontal levels, based on supply and demand. There's a lot we talked about diagonal traders. And really the diagonal line, it's more about the trend than an exact line, because it's not about the support being right here. You have to understand, as with horizontals, diagonals, there's a little bit of a zone around it, a filter above and below. So you're really just kind of showing like a generalized price trend. And the problem with them is the sense that they're ambiguous, because you have to decide where you're starting your wick. When you use clear horizontal levels, you will see that the price really sticks to it a lot. So we have the progression of the recent top, the double top with the upthrust being the false bull break of an established resistance level, once captured and failed to be held. That was a big time bear signal. Kind of came back down, and before it got to that point, if we kind of just remember back, some people were on watch. I was on watch for a topping pattern because it was ETF launch and Ethereum had started to outperform Bitcoin, which you kind of see at every top. I started to look for that head and shoulders, of course, bull flag, right? But the bull flag target, the length of the flagpole, we didn't make it, right? We didn't make it all the way. We kind of stalled out. So you had the head and shoulders fail, and it was starting to fail right below 60K, right? That was your key horizontal level. After you listening to the price at your job as a technical analyst, you see that you were getting those data points right there at 60K. You had that fake out on the head and shoulders top. But then the head and shoulders invalidated, the bull flag broke out, and the bull flag stalled, up thrust, right? But that's all complicated. What did you just say, Big Cheds, right? All right, how about this? The price used 60K as support. It temporarily lost it, which was a bear trap. Had a nice run, broke the prior high, came back below, so that was a bull trap. Came back below, lost support. It lost support 60K. And you had the underside retest, which is called the pullback or bearish retest of broken support, more or less here, November 21, right here. And right back here, if you remember, if you kind of go to like a lower time frame, like a 4 hour, that all the names on crypto Twitter, a lot of them were talking head and shoulders, head, shoulders, but very few of them had identified the failure point. As soon as it broke below there, I tweeted out your long trade just got stopped out because it's a clear invalidation level. And that's what we just had as well, obviously, here. I was talking about here on Bitcoin. Bitcoin really, so we had a lot of stuff going on. We had these relief rallies, lower Bollinger to moving average resistance, lower Bollinger to moving average resistance. And initially the price had rejected EMA 34 exponential moving average, right? More price sensitive, more sensitive than the most recent candle. We saw evidence of weakening bear trend here, recapture of the EMA 8, recapture of the MA 20 middle Bollinger, and then kind of lower high breaks, right? But it was rejected at the level it needed to flip to confirm the resumption of the primary bull trend, 46K, which I had talked about before as kind of the failed double Eve bottom, right? So that's kind of how everything led into where we are right now. So you have 46K in play. Bears have had momentum, right? Bears have had momentum. Bulls have tried to rally. To simplify things, bears have had momentum after what I believe is a really clearly defined top. I live tweeted it. Bulls have been trying to rally, and they've had rallies from lower. Rallies have stalled. Again, we're trying to bottom, and again, it's a potential head and shoulders. So what's the head and shoulders neck baseline? 46K, 45, 46K. What's the right shoulder? Really right around 39.5. That's your invalidation level that goes back to the top of the 80-day rectangle, that we talked about from the summer, where where it did the higher low test, and then the highs of January, lows of February. I mean, that's a really well-defined level, 40K. But if you're just a completely new trader and you're like, what did Big Ched just say? None of it made sense. you can just go long above 40K and you're bearish below 40K because those key psychological levels need to hold. The price had held it, had kind of suggested that was an important level. If you're a more technical trader, you just had a head and shoulders breakdown. And it wasn't too surprising given that we rejected at the underside of the prior broken support level. So that's kind of where I come from in terms of where we are now. I mean, lower Bollinger dip, weekly chart is kind of a mess right now. We're below the weekly 50. I mean, that's important. We kind of pretty standard EMA 8 rejection. You see this flipped around during the primary bull trend that led us from, the 14K lower high break and then the prior all-time high break at 20K. It was EMA 8 support, EMA 8, right? Exponential moving average 8 period. Upper Bollinger to EMA 8, upper Bollinger to EMA 8, right? And that often flips into resistance. So it's flipped into resistance. It's doing that here. Where does it catch a bit? I mean, do we drop to the lower Bollinger again? Do we go weekly MA 200? This has been the level you incredibly high confidence buy over time, the weekly MA 200. Do we get there? I mean, I really don't know. You have like a bottom, you guys know this as well as anyone else. A bottom is slow to form and you have these attempted bottomings. So it's not just going to go like up 30K in one day. You're going to try to do a head and shoulders and maybe next time it will actually work out. So back to our earlier discussion about like playing in the middle of the channel. What I was saying here is you had the 46K breakout level, and then you had really this invalidation level, and everything in here is chop, right? If you weren't already in a position, you could have already been in a position right back from here. A pretty easy trade setup here on January 24th, right? Pretty easy trade setup. Once you recaptured that low of the 22nd, it's just a very simple spring. Right. And this is what I'm on watch right now. It's what I told Bitcoin Live members to be on watch for. We're on watch for a low to be established, like here, perhaps, and then to be temporarily lost and then recaptured. It's just an incredibly easy way to structure your trades. I do a lot of them myself that way because, it makes it easier to not mess up. Because if I break back below it, I can just cut. That was an easy trade setup. You're in there. If you're already in there, fine, but you've been tested. Look, already back down to those lows. Do we get another one? I don't know. What do you do here? I think you either have to enter on a recapture of like 36.5 and kind of use that as your risk. But if any bounce up to 40K is probably going to get rejected. So you're kind of watching for that as well.
So you're waiting for this candle to close, for that spring to close before you enter the trade, or are you taking it as?
Yeah, that's a different question. That's a question about confirmation, and that depends on who you are. Are you watching it all day? I trade off the 1 hour chart usually from my entries, and then the daily chart gives me a sense of the trend. And I could go 15-minute for periods of volatility or when the price is testing a key level. But like if you're a regular person, most people like work real jobs, so they're not sitting there watching the 1 hour chart. They have like their family they have to deal with or their job. So I mean, one close, two closes. It's based on your risk management style and really if you can watch the trade.
Yeah. And assuming that candle goes up, you at the candle close a 1 hour chart, you're gonna enter the trade, and where you're gonna put your stop loss at the lowest low?
Yes, that's the concept, right? If you are looking for, your thesis here would be a temporary overreaction, right? Such as that we had back here, right? To the end of January. But like, where do you enter? I mean, you can't just buy the falling knife. So the only way to enter is when there's some resumption of bullish momentum, and that bullish momentum is at least signified or at least observable or data point worthy when it recaptures a broken support level. So that it's like a trend line, right? A trend line like 2 points isn't really a trend line, but now you get 3. Maybe now you get 4. That's a trend, right? Points, data points. So you got to start somewhere. So you're potentially starting with a recapture of some low. Doesn't mean that's the right one. It might be much lower. We may have to break this low and then get a spring off that low, or maybe it's just a spring of 30K here, like we had here, this beautiful bottoming. We had 30K spring, but you'll get other data points. You don't need a FOMO because we get the spring here. Then we got the EMA 8. Now we see 3 days in a row closing above the EMA 8. That's different. That signs a weakening trend here. Now we got the EMA 34. Now we're closed above the MA 50, first time since April. So bottoms are slow to form and it's like a multi-act play as well. So you got to kind of like, you could try to guess when the first act is, if that's your style, but it doesn't mean every trader should try to do that. But yeah, that would be the concept here with like a simple spring.
What I like about the way that you do things, and I think this is something that and it's a preconceived notion that I got taught when I started trading, is that the moving averages is a buy and a sell signal. And I think, Cheds, you've clearly pointed out that the moving averages today does not need or should not be construed as it, because there's that normal saying 50 closes over 20, it's a buy. And then if you really go back test that, every time you see that, you pretty much, the move's almost over, and the 20 crosses back under, the move's almost over again, you're almost back at break even. So you're using your moving averages purely as momentum indicators, and you're basing your buys off a complete different theory, looking at the horizontals, which is true support levels, and you're using the Bollinger Band as kind of the extreme ranges. So how does that really tie in? I'm going to bring back your chart.
I think I would mostly agree. I want to touch on a few more things there. So, I approach with moving average. Here's a few things, right? You don't want whatever moving average you're going to use. MA50 or EMA50, EMA8 or MA10, like use that one. Don't change it for a different chart to fit your bias. Like you got to pick one and just stick with it. Otherwise, will have no idea where you are in a trade. So stick with your moving average, okay? Moving averages, I will use them as support, but I listen to the price. So for example, like there's a concept like a strong uptrend on that first retest of the MA200 will almost always bounce off of it. So let's go to like Matic. Matic. Let's go to Matic. All right, let's go to Matic. So you take Matic, for example. So when you have like a strong uptrend, right? So first of all, what's an uptrend? An uptrend is a rising 200 period moving average with the price above it confirming it. That's the technical definition of an uptrend. And so you've got really all this price distance between the price and the moving average, the 200. So back in June, and this is on the daily. I mean, what is that? 2 cents? Yeah, 2 cents. And it comes back, it retests it at 65 cents. But it's the first time it's touched that in so long. You will almost always bounce off of that. Okay, that's just a rule of thumb. Because it's at that point, what was the retracement at that point? We're already looking at like a 80%, 70, 80% retracement at that point. So that's an overreaction move. Now the second time, not as much, right? And it kept kind of bouncing off of it, almost like a skipping stone, perhaps, on a lake. And now we kind of see that weakening trend, right? We're below it. But to get to my point, you listen to the price, right? The price said this is the moving average is important, but let's go to Bitcoin on the weekly chart. So on the weekly chart, it had been really important as the MA50 had been incredibly important. And it wasn't because I like the MA50 from another chart. It's because this chart's telling me, pay attention to the MA50. This is the arbiter, right? And here 50 period, simple moving average. That means all 50 of the same weighting, right? Bounced off it, held the area, closed above it, boom, right there, warning sign. First close below the MA50 since, like the 8K range, right? That's a sign of weakening trend. Your job is to ride the trend, but while you're riding it, you're watching for signs of weakening trend, right? You're watching for the car next to you. Is he gonna turn into me on the highway? You know what I mean? You're always watching for the other car on the road. That's your job. You're watching your trend. First close below. Right? First close below the MA50, it bounced, and then it kind of ultimately continued down. But the MA50 had been the buy level. So moving averages, if the price pays attention to it, I will use that ideally in conjunction or what's called confluence with the horizontal zone. Yes. Moving average crosses. So the moving average, with a cross, you need to understand, you need to look at the proximity of the price to the cross. So if the moving average is crossing right where the price is, that's good. Okay, that gives you some significant some value to that signal, in my opinion, because it's not baked in yet. But if the price has already dropped like 10% lower than those moving average crosses, you're more likely to bounce at that point, especially if the price is, let's say, below the Bollinger Bands. Also, you need a trend to cross, right? I read about this in the book. I have a chapter, Moving Average Basics. You need a trend to cross. So like a moving average cross in a sideways market is nothing. You need a trend to cross. Like a Japanese candlestick, like a hammer needs to be at the lower Bollinger. A hammer at the middle Bollinger, it's okay, but maybe I'll wait for the lower Bollinger one, right? You need a trend to reverse is that same concept with moving averages.
So that's very interesting. So with that being said, if you were to dive into a weekly time frame to try and prognose, is it over? I mean, it's a really big debate.
It's what over, brother?
Bull market, bear market, is it over? Should we pack up and go home? And, and start, let's look at that, because there's theory behind the 3-day and the 200. There's also some significant. We had Val here that really, gave us some interesting feedback on that. But I mean, I want your take now. Everybody hears me rambling every day, so it's your moment here, buddy.
I have no idea. Yeah, I don't know. I really don't know. I don't think anybody knows. Anybody who tells you they know is they just still don't know. I'll tell you what we do know. So I'll tell you, we do know we're below 40K. We know bears have momentum. We know that. We know that bulls have several potential great support levels. Any of them could be the higher low, and the higher low potentially to the bottom of the 80-day rectangle, the price cluster in July. But if you've been around long enough, you know that you don't know anything, because nobody, this crash, the COVID crash, I've seen 99% of the market participants get confused and shaken and surprised. Like, I've been through several of these moments where everyone's like, did not see that coming. Nobody knows. So you have to be ready for that. And you have to have your low ball bids in. You have to have the strongest market participants already marked out. You have to understand their key support levels and understand that if you want to get in a position, I'd bid way down there with a quarter of my position. I'd start there. You're ready for those huge drops. If we close below the weekly 200, it's bad, and it's probably, then maybe it's over. We start closing below the weekly 200 for 3-4 weeks. Then there's really, it could go a lot lower. Right now, I don't know. It could bounce off 30 and it go to 100, and it would say, okay, I can see it. Technically, I could see it dropping to 20. I could see it dropping to the teens. I could see it dropping to 8K, and it wouldn't change how I see the world, right? Kind of thing. So, but no one really knows. That's what we like about the market. It can turn on a dime. Yes, I'm a Bitcoin believer and evangelist and all that, but I want volatility as a trader. Just show me the action. That's what I'm interested in. That's where I'm going to do the best. And kind of absent the action is where the bad habits come in. I start forcing it, and kind of, my impulses take over. So, if it dropped to 20K or dropped to this weekly 200, I think that'd be great. There'd be great trading opportunities, because I think long-term it's a secular bull trend. I think the scarcity of Bitcoin, to me, is kind of a fundamental analyst who's terrible as a fundamental analyst, is I understand at least it's scarce. And so, I want to accumulate more. I think it can handle a big drop and then continue on. And, people will eventually forgive and forget. But in the meantime, you still have to manage your risk. You still have to, that's what it's all about, right? If you're holding like Michael Saylor and you don't care, then you don't care. But if you're probably watching this, you want to trade, you want to kind of manage your losses, you gotta kind of define your risk and only enter at specific levels and kind of do the stuff, that we talked about earlier.
So with that being said, looking at Bitcoin now, where would you be looking for trades, Bitcoin or alts? I want that volatility, buddy. I mean, also really been taking a hammering. Is your attention going to be focusing on Bitcoin, or how do you go about that? I
have to watch all of them. Kind of, it's like my job. But I would love to just watch Bitcoin, because that kind of leads the market. I just have a few ones that I know are the strongest in my mind, and I'm not going to watch them until once I know Bitcoin's bottoming. Then I jump on those plays. And that's what I do. Like, with Bitcoin dropped, I'll tell you what I would do, right? If Bitcoin, what are we at? So we're at 35.6, 35.8. So if we drop to, okay, let's go back to the daily chart. So this is just the same stuff I said a little bit earlier. So let's say we broke below this low at 33, and we quickly recaptured it. And especially if we drop there fast, a slow bleed is no good, right? If you want to bounce here as a bull, you want a big drop quickly, right? Just understand that you want that, okay? And if it happens, say thank you rather than no, because that's going to lead to a bounce. You need that heavy drop. If that happened and Bitcoin recaptured that low, I'd start to look at Luna. I'd start to look at AVAX. I'd start to look at the strongest alts, 3, 4, 5 of the best, That's it. Like I played sand the other day. I had a little trade on that. I played sand. I played like 5 max. I would not touch anything that has been weak, especially now. It's an incredibly terrible market environment. And too many, the newer mentality as well, the ones that are the most beat up have the best chance to run. But trends will continue. And you want to play the stuff that has been the strongest before the breakdown, because that will respond the best. It will put in higher lows. It will break the higher highs. It will make it easier for you to trade, because that's ultimately what you want. You don't want to be continually put to a decision, a difficult decision, because you keep buying a downtrend and guessing when it's going to reverse. So that's what I would do. If Bitcoin did that flash dip and recaptured a low, then I would boom. I would go right to Luna. I would go right to Sand. I'd go right to a few other ones.
So for our viewers who still maybe have some weaker holds, if you have some weak holds in your portfolio, would you switch to those stronger holds?
I would get rid of them completely. I would get rid of, first of all, you want to cut your watch list in half or in a third, right? If you probably have 30 plays, get down to 8 or 10, find the strongest charts and learn those charts, because when you bounce around to all these different plays, you don't know what you're getting into. You have no idea what you're dealing with. When you watch a chart, you study it, you get muscle memory, you kind of understand it, because you need conviction to successfully execute any trade, right? You need conviction. So you're focusing on too many trades. Cut it in half, cut it in a third, focus on those trades. Also your stuck money, you need liquidity. You need liquidity to take advantage of volatility. So if you've stuck money, I get requests for charts, and I ask these people, like, why are you still holding this? You've had all these clear broken levels to get out, and it's amazing. I've taken a lot of losses, obviously, because you trade for long enough. And when you exit those losses, you feel great. It's all of a sudden this burden's been lifted. And it's like it doesn't own you anymore. It's the idea of letting your trades own you. It's just the worst. And then you say, why did I do this to myself? It's like you're shackling yourself.
Eating yourself up. You're punishing yourself.
You're for no reason. So we all go through it. You have to try to limit it. We've talked about that in this show. I would say with the alts that are underperforming, I would just get rid of them. And I would focus on maybe the 4 or 5 strongest charts. And I would try to buy a dip in those, but not yet. Not right now. I'd probably want to see some more strength in Bitcoin before I would be interested in playing alts.
Yeah, we're kind of hands off alts at the moment. Looking at there's a select few that we did look at that kind of fits the same criteria for Bitcoin. So at this stage, do have a little bit of hope. But maybe I saw a comment here. Can you maybe weigh in your thoughts on Luna?
On the chart?
On the chart quickly for one of the guests.
Yeah.
And I saw that. And I mean, you mentioning it, Luna, is one of your favorites. So let's have a gander.
While we're talking about strong holds, I don't know if you know this layer 1 Telos, who are actually sponsoring this channel. Regardless, sponsor or not sponsor, tell us what you think about Telos as well, please.
Which one?
Telos.
Which one's that?
TLOS.
Oh, is that? I don't think I've ever heard of it. TLOS. Y'all have to.
Yeah, it's unknown.
It's unknown. It's a layer 1, but just tier wise. Forget about the FA.
Oh, I love it. I love it because I can be brutally honest, and I do it. Yes. I say it in Bitcoin Live.
We want honesty.
I say in Bitcoin Live, they give me these chart requests. I'm like, listen, I'm going to tell you if this sucks, and I'm going to ask you why you're holding it, because it's like I've been through it. Luna, look, it still looks good. It's still a rising MA200. The price is above it. Like there are very few alts that look as good as this. FTM looks pretty good, but it's testing a key level. Like FTM's up there as one of the better charts as well. Luna's it's just one of the few ones. Remember I showed you Matic earlier, and the concept of the price distance and the time between the
first test of this 100 MA.
And it kind of bounced it, but it's still holding it. There's only a few. Like so right now, if you only play the altcoins that are above this blue line, you're going to be in some pretty good shape. Let's see.
And
TLOS.
close to your invalidation, because your argument is you would not want to see them fall below that.
Yeah, it's right. It's right there. So TLOS.
It's a low risk, coin.
So I've looked at it before. It looks like, it looks pretty good. But you are below this high, right? This is what I don't like. The fact that you had this well-established resistance level, you broke it and you lost it. So You know, is that like what Bitcoin did, the beginning of a, you know, a big drop? I don't know. But the other side of that coin is you've really well established level now. So if you're not in it and you're kind of looking for where to get in, and you can see it was also rejected here. It was rejected right there as well at that same level. So right there. Right there. So basically, if you want to get in, obviously you can, if it gets back up above that, it's a pretty easy long. But if I kind of step back, I could say also it's really just a big old rectangle, a sideways move. It's still digesting this massive move here. So you went, you know, from whatever 13 cents, you know, all the way up to 85, and it takes time to digest. It's still new here in Qcoin. You got the 200, you got the 50. I'd say it still looks pretty good.
Yeah, there's more history on those DEX's charts or on CoinMarketCap. I mean that one exists since 2018. So there's a long period of accumulation before that. I
think it's fine to watch it. I think it's in like a second. It's not the top tier, but it's like it's definitely looks better than a lot. I'd say it looks better than probably a majority of the current market participants is what I would say.
So can we tell you what we thought about it? And we're sponsored by them. Full disclosure.
All right.
We've been saying to our people now for the last 2 weeks, don't buy Telos, because we were looking at that black circle when we really started. So, and we're only asking them to start considering it now. There is a short trend forming and a buy opportunity to our strategy, because you know, we've also figured a way out, you know, how we manage our risk. But the fact that it looks decent to us and you're liking it, I mean, come on guys, we didn't pre-prep this. It just points to the fact that good TA doesn't need a script.
125. I wouldn't buy it. I wouldn't buy it till it breaks 125, because I think you're probably going to reject any kind of move here. So if you do buy here, I think you probably want to take profit as it approaches this key level. Like I would not underestimate the importance of this supply or resistance level.
That's key.
My bias is at your 200 moving averages here.
Yeah, I think you're fine here. I mean, you're fine for buying down here.
Yeah, exactly, at the 200 moving average.
I think you want to define your risk, your stop loss, really this level. If you get below 75 cents, I think it's going to go probably, you know, 50 or lower, probably below 50.
56. Yeah. I've got a buy for 56.
56
the argument
55,
is Bitcoin, with Bitcoin kind of sitting there, I'm not going to touch it. I'm not going to touch it until it's there, because then at least I've got that long rectangle that you're talking about. Yeah. I've got a strong reason to believe that it's going to have a bounce there at least. So I can at least secure partials, stop at break even, and let the trade and the market do what it needs to do. You know, we believe staring at a candle doesn't make it grow. You know, so I tend to want to, you know, get the work done, and then let the chop figure itself out.
No doubt, brother. No doubt. I mean, it's going to really probably, a lot of it's going to depend on Bitcoin. Like if Bitcoin drops to 30K, then what TLOS will probably go to that 47 cent level. It will hit that lower pocket. And you got to be prepared for that, whatever you're trading. I think you want to try to look at just the major levels. And you think about it that way. Like Ethereum does that a lot, where it's like, kind of look at the major levels on Ethereum, where you've got kind of like, you know, 4K, and then you get all this stuff right there, like 33. You know, you break down here, you've got all this action, 1800, right? So you kind of want to think about that. We're either holding right here in the mid twos, or we're probably dropping to, you know, to 1800. And then you got to kind of simplify it for yourself that way. You know, it's not always that neat and clean with Bitcoin. It tends to be. The horizontal levels are pretty clear. So 40, 46.
Yeah, I'm seriously not a ETH fan at the moment. This is our play that we're currently running, and I'm going to quickly just share my thoughts there with you. So that was my short zone. So I was looking for short at around that level. That went a little bit higher. Yeah. But for me, I trade with an axis and supply and demand. I don't trade with trend lines in that sense. The trend is a momentum line for me, and so for me, this is when supply enters the market. It's completely different because it gets determined through the axis, the angle to which the market moves. When we look at these levels, you can actually start predicting trends rather than to try and wait for one to fall. And for me, this is just another key. And you can see we're basically running around that supply. So I'm looking at around this area over here for probably an exhaustion for ETH before I would even start thinking about longing.
Makes sense to me, brother.
Which is around Yeah. Buddy, any other thing, any other hidden gem that you might have that you would want to share, or a trade that you're kind of waiting in the ranks? You know, we all have those future setups. If only this could happen.
Well, I mean, look, first, I would tell people to definitely, you got to decide like if you're going to take trading seriously or not. And that's like a big thing. It's not something you can kind of just like casually do. So if you're going to like, do it seriously and put money into it, you got to really study hard. And that means studying the charts of like whatever you want to trade. I do that like I do it all the time, for Bitcoin Live, because I'm constantly watching them, constantly watching them. So it's like I trade all the stuff that I really look at every week. I know I don't have like a level right now because this market is in flux. And as I said, like we're just broke down, and then we just did the retest, the underside retest of 40K right here, where we broke down these 2 days. So it's like it's a pretty bearish environment, and then there's some war going on out there. So I don't think anybody can be really too confident about any like one trade right now. It's not a stable market. I think you need to be careful and really protect yourself. I think you want to be ready if the market does like a crazy flush. It doesn't mean it's going to. This could be the bottom. There's always anything's a possibility. But like, if we get a big flush, you want to be ready. And I don't think this is the kind of level where I'd say, yeah, I'm going to buy Sol at 70, or I'm going to buy Luna at like 40 or whatever. I mean, you could go through any number of the stronger market participants, and I could just fire off levels I'd love to buy at, but they're really just going to be like old support levels from like, last bull run or like last year or whatever. And they're going to be pretty obvious. So, be careful about having too big an appetite to really want to buy this type of a fear. I think, yes, you want to buy fear, and it's a little counterintuitive, because I've written a book talking about buying the fear, but I think this is just a really hectic environment. And I think you want to wait for really clearly defined price action. Like I said, we just had a head and shoulders that attempted to bottom, and it didn't. But if it did, it would have confirmed at 46K. You had a clear level. So you got to wait for a pattern to form, or wait for a spring, like we've talked about, a broken low and a recapture. But it's just be careful is what I would say. This is kind of an extra special time.
I mean, come on, guys, give a 999 there in the chat for Cheds. I mean, he's never even seen any of our charts, and I mean, he's kind of preaching in the same direction that we have, and it just shows you, when TA does the talking, and it's not our opinions and our feelings that we use. So Cheds, we managed to get everybody out at 45, and we grabbed the price buy here, but at this stage, stop still sitting there at the bottom. At this stage, realistically, and that points to it, we're not at any stage where we can move our stop closer to our entry to reduce risk, and we don't have any sign that it's going to go back higher. So you're still in a position where the risk is there, and we're waiting patiently for some signal that we can actually say, right, stop closer to entry, or a hypothetical bottom is in for us to start capturing some areas. I think if we do rally here, my first area would be around 43, and it kind of aligns with what you've been saying. Best case scenario, I think, what is your target? That box at above there, I think it's 43K.
No, I think actually we'll reject if we bounce to 40K. I don't think we can underestimate kind of the breakdown that meant in the chart, because it was an invalidation of like a head and shoulders. Think about that move ADA made, where it went from like $1.50 to $3. It had the failed head and shoulders. We just had a failed head and shoulders, and it was right at 40K. So I don't, you could totally be right, 43K. But from my style and my way of thinking, you shouldn't even really be thinking about that, because 40K it's a huge checkpoint. It's like the checkpoint across the border. You're trying to go to another country. Like, they're gonna search you. So we can't, we got to deal with that level. If we bounce here, and we got a little bounce while we're in the air, that's great. For now, we have a spring. There's your spring. It just happened on the air. We just recaptured this low. We're just now above. This is live. I'd be long right now. I just went long, right? Like, based on what I told you earlier in the show. I didn't, because I'm talking to you, but I would have just gone long. And the low here was 36.3. So I would have gone long at like 36.4, and my stop loss is like 36.2. Real tight, real close. I'm looking to catch some momentum, right? Nice little daily candle. Now I can go lower time frame. We're right at a key level. And there you can see it, right? The bottom, right? Are we going to reject here? Maybe we chop around, everyone gets screwed, because you don't always get a clean break, right? I don't always get a clean break. Maybe come and do that, and nobody wins. It likes to do that to you. But I'm observing the fact that you've got a kind of an underside of the prior support level that get a little momentum here, maybe flipping it, right? So you want to pay attention to that. And if you miss it, you say, okay, I missed it. I'll wait for the throwback, because now I've got this resistance. I'll reject into, I'll come back and I'll look to find that throwback, and then I can break through, right? And that would be kind of a common way for a bottom to form. Some of the best traders only enter on the higher low after the bounce. Look at that. Boom. There you go. Right? Boom. It's a key level flip. Other people are probably trading that. But unless you get right at the entry, you don't want to do anything, because then it will do that. It will come back. It will chop you around. So you buy right at a key horizontal level. You define your risk. And that's kind of how I would be playing that. I'm not saying it's going to bounce right now, but I'm saying that's an example of how I might have might be structuring my trade, right? Once we got above that low. So see what happens.
I love it. I love it. A lot of wisdoms there, guys. So we went a little bit more riskier. We gave you the buy at 34.5. And at the moment, I think the key is you're in a trade. Cheds is now giving you guys a good play-by-play book of what he thinks. Now I've lost my own chart for myself, and that is definitely the thing. So for me, the high level, even a hope of coming back and being aggressive at around these ranges is if we can get above that at a minimum. So at this stage, I think our invalidation or our risky take some profit areas is pointing in the same area at that stage. And then we have to wait and see, because a lot can still happen. We're about 5 hours away from the daily close. And if we start diving into smaller time frames, we have not even engulfed any bearish structure at this stage. We are fighting up. And until we've done any of that, I think the reality is that it's still a risky position for us to be in. Cheds, buddy. So with that being said, stock market, legacy markets, DXY, oil. Do you have any thoughts on those?
None that are worthy of listening to. I don't really know those markets. I am very clear about what I know. I try to really hyper specialize in this, so I can speak confidently on kind of these subjects, but not those.
Well, that's an honest answer. Thanks a lot, buddy.
No problem, brother.
Okay, buddy. So you've given us a lot of material, and I think everybody, I mean, we've got a hell of a lot of 999s. I don't think we normally get so many 999s on a chat. So, I mean, the audience really love you. And like Lee said in the beginning, realistically, these guys are already following you. But where can they get you on YouTube?
So if you go to Cheds Trading, I'm on YouTube at Cheds Trading. I don't have it up here. I'll just walk you through it real quick.
Please, buddy.
Yeah, thank you for the opportunity. So we'll slide that. So if you go to Cheds Trading on YouTube, I would go first to the playlists, and you want to go to tutorials, educational live streams. Before we started, Lee asked me, like, what's your secret? I'm like, bro, there's no secret. I literally recorded a webinar explaining my entire setup and how I structure my trades. I talk about volume, how to understand like candlesticks, classical charting, like watch these. And I really do it. I do it, obviously I want to like grow my account, but like I got so many questions over time, and I was just like, you know what? I'm going to put like the most common questions. They're all answered there. You really have to watch it. It helps you understand what I'm saying. The book, I have the book for free. I just did lesson 12. I'm going to do all 50. I'm doing like every 4 weeks, I'm doing one. It's for people who can't buy the book or they literally just don't want to buy it. It's fine. Here, watch the free version. And then I've done long interviews. I've got a great selection of those, really smart minds kind of in the crypto space.
And the book is also available in different language, right?
The book, what book? No, just kidding. Let's go.
Trading Wisdom. I saw a tweet. It was available in Spanish and French.
I have a Spanish and French version. There is some complaint by Parisian speakers that it's more of a Quebecois French or a Canadian French. So, but the Spanish version I've had no complaints about. So that's just full disclosure. Like some people haven't liked the French translation, but I have French and Spanish. But what's cool is I just look at that 4.8 out of 5 stars. It just went from, and now it's like rounding up from 4.5 to 5 stars. It looks awesome. I mean, I never would have expected it to do this well. So I'm really grateful. Check out the Kindle audiobook, hardcover, paperback. And I have another book coming too, actually. in a few months. So I'm looking forward to doing that. But just watch the free stuff. Go to the YouTube, watch the tutorials, watch the trading wisdom, and hopefully, that, helps you in whatever you're trying to do.
We said this many times before. YouTube is
80%. Yeah, I mean, trade setup, technical analysis are good and nice, but the psychology part of trading is the most important. 80% of the time is the psychology. So don't watch the free stuff. Buy the book.
I appreciate that, man. Thank you so much.
Well, go to his channel. I mean, he's made it free. And that's kind of the thing. When you start trading, Cheds, I mean, my journey was all crazy. I mean, I started thinking that I'm the smartest person in the world and I'll figure this out. And I went, and because you don't know wrong from right, anything that kind of resonates with you on YouTube might be construed to as right. Now, you said it earlier, we don't really know. We manage risk. That's all that we do. We play the markets, we manage risk. But the thing is, a lot of what is free content out there does not paint that honest picture. It tells you, you need to do these 3 things and you're going to make it bank money, big money, and that's where people go wrong. So I really want to say thank you for your, on behalf of the community. I mean, you can look at the comments. I mean, these guys love you. Well done, buddy. And go check it out. There's, for once, free content without no strings attached there to help you. So well done. I hope we can have you back and we can actually chart and TA when we're in a trending market. I don't want to put you on the spot now, but I would really love to just chart and TA live, and let's have some more trading fun.
Absolutely, man. It's been a lot of fun, and it's great. Just to be able to do this, isn't it cool to just record a video and like people are watching and actually giving them good content? It's a good feeling. So I enjoy it.
Cheds,
thanks for your time, buddy.
Star, buddy.
No problem, dude. No problem.
Cheers, bro.
All right, take care, everybody.
Right, Lee. Wow. I mean, that was a big move, and I really enjoyed it. I'm gonna say goodnight. I want to grab Cheds backstage and have a quick chat and see if I can broker him back for you guys without putting him on the spot. I don't want to be rude. And
okay, guys. Thank you thank you. I mean, you to be here with us again today, and
as you say,
are we having see you tomorrow? I won't be on the show tomorrow, but Rudo.
Cool, buddy. What we say, I'll be there for you guys, and as always, we'll keep hustling. Cheers, everybody.
Keep hustling.